What's up everyone, my name's Robbie, this is Robbie in Manila, and today we're talking about what to do when you can't find stocks to buy. So, sometimes the stock market is highly rewarding and you have more ideas than you know what to do with. And sometimes your 18-year-old neighbor who knows nothing about stocks YOLOs all their money after reading a Reddit post about GameStop, makes 1,000%, and then turns around 5 months later and makes another 1,000% in AMC, and you're sitting there on your couch just crying yourself to sleep. I think what I'm trying to say is that, I don't know, we all run out of ideas. And so this is a list of things I put together that, I don't know, hopefully can prevent you from YOLOing all your money in a meme stock when you can't find stocks to buy. Okay, everyone, let's go ahead and get started, and I would love to hear from you in the comments below. I want to know which of these 5 that I end up mentioning is going to be your favorite. Just let me know. I want to hear from you. And so my first idea here is to read, and read some more. So within this first idea, I've actually broken it down into 2 kind of subcategories that I think are good to do. So the first thing I like is to just kind of find a day or find hours at a time that you can sit down and just really delve into reading. Now, I think what you read is actually a very big key to this one, and so I actually love reading this newspaper. It's called Barron's. So Barron's comes out just once a week, and sometimes you can get it in your local supermarket, and sometimes you're just gonna have to get a subscription to it. So Barron's has tons of great articles, and it's only specific to investing. There's articles on technical analysis, there's articles on fundamentals. Barron's has their own thoughts on different stocks that they think might be good buys. Everything in Barron's to me is great, even down to the advertisements. Because it's only a stock magazine, it's really got great advertisements geared to different funds and things like that. And sometimes I even find myself looking at a random fund that I see in there and I'm like, you know what, that's actually not a bad fund. So when it comes to ideas, I think sitting down and just reading through an entire Barron's newspaper, at the end of that, I think something is gonna kind of click. So by the way, if you're interested in Barron's, I do have an affiliate link in the description below that will help you get a subscription. So if you are interested in Barron's, you can get a print plus digital for as low as $9 per month, or if you just want to go digital, you can get it for as low as $4 per month. So the next category that's related to just reading a lot, like something like Barron's, is reading research reports. So when I say reading reputable reports, what I'm talking about are investment companies with good reputations that put out certain reports on certain topics that are worth reading. So for example, any of the main brokers are going to have free research reports available to you. So if you have a Fidelity account, if you have a Vanguard account, a Charles Schwab account, they're all going to have access to research. Now, some of this research could be individual stock research if you're really trying to delve into specific stocks to really just get the wheels rolling. But sometimes what I like to do is just read things that are more broad, like sector research, trying to find maybe a new sector that maybe I should invest in, or some different ideas that involve a specific segment of the market. So by reading a good periodical like a Barron's newspaper or a Wall Street Journal or something like that, that really just focuses only on business and investing, and or reading reputable research from different companies, I think can really help get those wheels turning and maybe help you find some new stocks to buy. My next idea in this whole what to do when you can't find stocks to buy actually involves keeping your money invested. So all the time, people that can't find stocks decide that they just want to keep their money on the sidelines because maybe they can't find stocks because they think they're overvalued or different reasons. And so honestly, this is usually going to be a mistake. It's not always going to be a mistake, but there's a lot of times where you should always have your money invested, and here's why. Nathan Faber took a look at a 92-year period, and from 1926 to 2017, the market has had positive returns over 74% of rolling 12-month periods. So if you had taken any 12-month period over that entire span of time, you had a 74% chance of having a positive return if you had kept your money invested in the stock market. And this is a very important topic for a lot of people, because I think a lot of people out there have this feeling that the stock market is overvalued and they don't want to invest in it, and they're just going to wait until it comes down a bit. And as you can see, the stock market is way more likely to go up than down in any year. And there are so many times when this ends up coming back and just hurting you because you didn't end up investing and you missed out on 20% gains over a few year period. So maybe the best thing to do would be, if you can't find a stock to buy in this situation and you're not very happy about what you see in the market, first, you could just buy a total market ETF, like a VTI, for example. This will allow you to keep your money invested in just like a broad ETF that tracks the entire stock market, and so you'll still have exposure to stocks, even though you can't find specific trades that you want to make. Now, another way to think about this would be to maybe just go with something that has a lot of yield. So for example, the QYLD ETF has a nice yield that's paid monthly, so if for some reason the market does decline, at least you're going to get your yield. I would say that more times than not, having money in the QYLD type ETF will do better than if you had something in just sitting in a money market fund making no interest. Now moving on to my third idea, thematic investing. So if you're like me, you may have this kind of pride thing where you always want to try to beat the market, even though you know that the odds are probably against you. So sometimes what I'll do is I'll look for themes. I'll think of things that have been underperforming lately and maybe prime for outperformance coming up or something like that. And I'm thinking of basically in terms of themes. So an example of this would be for example, momentum stocks semi-annually, they usually change up their positions. Now, momentum stocks lately have not done a very good job over the past, let's say, 6 months. And so maybe there's going to be a new cycle of momentum stocks coming into these ETFs that's going to do better than it did the past 6 months. This is just a thematic way of thinking of maybe throwing some money into a position because that position didn't really outperform recently, but maybe soon there's going to be some performance. Another way of looking at this is maybe carving out a small kind of speculative part of your portfolio and going thematic. So maybe you just go with 10% of your portfolio in a certain theme that you like. Maybe examples of this would be in the year 2020, energy stocks really didn't do a very good job, and at the end of 2020, it seemed like it might be a great place to have some money. Now, they had gotten crushed during the year, so if you wanted to jump into that, it might have felt like a speculative play. So that's why you don't put too much of your portfolio in it. Or even something like the EV craze that was going on, maybe you wanted to hop into some EV stocks or some EV type of ETF to try to jump on that theme. And now onto my fourth idea, back tests. There's a lot of different websites, a lot of research that's done that do go over back testing. And sometimes you'll find interesting back tests that essentially sort for different stocks in certain ways and create baskets of these stocks, and they show that certain stocks outperform others. Now, I made a video on this, I will link it in the description below, but basically that particular video, I found a back test that I thought was really interesting, and I tried to recreate it myself and see if a basket of 40 different stocks would outperform. You could also go with something like Joel Greenblatt's Magic Formula Investing. So there you can find the 30 or 50 stocks that meet his different formula. You could use this for an entire portfolio or just a portion of a portfolio if you can't find other stocks to add to your portfolio right now. By the way, if you end up going with a back test and you need to create a pretty big portfolio of 30 to 50 stocks, I do think M1 Finance is probably one of the best places to do this because the way that it's set up makes it really easy to basically create equally weighted portfolios of stocks. And if you are interested in M1 Finance, I do have an affiliate link in the description below. And my fifth and final idea is entitled, Are You Bearish? Now look, this idea is the most risky because, like I said, the market is up way more often than it is down. This is essentially a market timing idea, and it's probably not a good idea to try to time the market unless you know what you're doing in terms of technical analysis. And even then, it can be a risky way to invest. So essentially what you shouldn't do is if you have a feeling that you hate the Fed and don't like what they're doing, that's not a reason to be bearish and bet against the market. If you look at the technicals of the market and you think that there are reasons why the market might be hitting some resistance areas and it's going to start going down, if you see some bearish patterns like a descending triangle or divergences between different indicators or lots of resistance in terms of moving averages or any of these different things, if you do look at the charts and you see technically some reasons not to invest, then I might do this. There is an ETF, ticker symbol TAIL, and it's the Cambria Tail Risk ETF. This ETF essentially should do good when the market does bad. Again, I wouldn't want to bet against the market blindly. I would at least want to read some technical commentaries that have good track records. And so that is it. Those are my 5 ideas. I hope some of these help if you're trying to find stocks to buy. And again, I would love to hear from you in the comments below if any of these ideas you liked, and I'd love to hear which one that you like the most. So if you like this video, hit that like button and subscribe to see future content like this. And if you want to see another one of my videos, there is one coming up on the end screen. You should probably click it right now.